In this class, we'll start with sale of assets related journal entries. Whatever the assets you purchased, after some times of use, you think it is irredundant or not required, can be sold off. Can be sold off. On sale, you can make a profit or loss or no profit, no loss. These are the three scenarios. You have to give importance for recording those profits and losses on sale of assets also, right? So you have to understand that. While selling the asset goes out. It's a minus item. Instead of that, you may get the cash. So cash, another asset comes in. It comes in, so plus item means debit. Clear? If we don't get the cash, we have to keep the person's name in credit that he has to pay us later on. Is that okay? So asset sold. For cash or in credit. In case of asset sold for cash, asset minus cash plus. The journal entry being, I will write here, cash account debit or bank account debit to asset. In case in credit, the party becomes my debtor. He is my debtor. He should be debited. One credit will have equivalent debit. 1 plus, 1 minus. Give and take. If I give something, I am losing that. Instead of that, I am getting something from you. Is that okay? One goes out and one comes in. Cash and asset. Cash account as well as asset account. Clear? If cash is not there, otherwise the transaction in credit, then it is debtors. If the party's name is available, we can write his name saying that he is my debtor and I can recover that money from him later on. If the party's name is missing, we can use a common name. The common name is named as debtors. Okay. This can be sold at cost or the value at which it is appearing, or at profit or at loss. In case of sale at cost, means the value at which it is appearing in the books, we usually call that being WDV, written down value. Assets could have been purchased some years ago. For the periods of usage, the value may be lost. That will be named as depreciation. So year on year, that value is subtracted from the assets value. Whatever the value now shown is after adjusting the usage loss. That is called WDV, written down value. The value is written down to lesser because of the usage. If you are selling at the same written down value, we don't have any profits or losses. If you are selling more than its value, then it's a profit. Profit is a happy scenario that gives a boost to the owner's fund. So company says, okay, this extra profit is for the owner. So the firm or the business has to pay to the owner, means liable. The business is liable to third party. Who is that? Owner. So it should be minus item. This should be plus item. Sir, how the profit is a minus item, sir? Profit is not the minus item. Okay. Business earns the profit for the owner. It should be payable to the owner. So this is liability for the business to pay to the owner. You understand? Always remember, the profit is a credit value. Profit is a credit value, minus value. Loss is a debit value, means plus value. Is that okay? So in case if we earn profit, that profit is credited here to profit on sale. Profit on sale. If I sell at lesser than its value, then it's a loss. Loss on sale. Loss on sale. Is that clear? Hope now you'll be able to understand this. This is the basic journal entry. And then you need to understand what is the value of the assets at the time of sale also be calculated. If there is any brokerage, or I give my asset for purchasing new asset, is exchange, and sometimes barter, all the situations may arise. You need to understand how to pass the entries in that case also. Let's start with the first question. Furniture costing 1 lakh sold for rupees 1 lakh. So furniture goes out, so minus, and cash we assume nothing stated, so we assume the cash comes in. Cash is debit. Value being 1 lakh as per the books and sold is also 1 lakh. It means no profit, no loss. The journal entry being cash is debited, cash or bank account debited. Cash and bank are interchangeably used. You should not have the confusion. Sir, here cash or here it's bank. No, we can use cash or bank interchangeably unless specifically stated. Right. Specifically stated means the cash withdrawn from the bank to the cash box are reverse. In that case, cash and bank are different. Otherwise, cash and bank are interchangeably used. Cash account debit to furniture account. Clear? This value being 1 lakh. This value being 1 lakh. Second, furniture costing 1 lakh sold for 120. So furniture minus cash comes in plus, and of course 1 lakh but sold for 20,000 extra, then we have the profit. Profit is a minus item. Minus item means credit item. Why it is minus? Because business is liable to owner. It's for the owner, right? So furniture account debit, and profit on sale. Sorry, to cash account. Sorry, I made a mistake. Sorry. Furniture is minus, no? Cash is debit. Cash account debit 1 lakh 20 to furniture. Furniture value is 1 lakh only. Cash is 1 lakh 20. And the difference between these two to profit on sale. Profit on sale. This value is 20. Third question. Furniture costing 1 lakh sold for 80. So furniture minus cash plus, and 1 lakh worth but sold for 80 means there's a loss. Loss is plus item. So the entry being cash account debit 80, loss account debit, loss on sale. You can write fully also, loss on sale 20, and to furniture. The value being 1 lakh. Furniture costing 1 lakh sold for 120 in credit to I and Co. and brokerage paid being 5%. So you can pass two entries here. Two entries, or you can make it single entry. Okay. Brokerage paid 5%. Forget about the brokerage, you can handle this separately. Now furniture costing 1 lakh. Furniture minus item. Cash is absent, and instead of that party's name is there. Party name should be plus. Are we selling at book value or more than that? More than that, 20,000. Then profit is there. Profit is a minus item. This is the first set. We can handle the brokerage paid separately. Thereafter, I will explain you how can you combine all these things. The entry being cash account means I and Co account debit. I and Co account debit. He is my debtor. Value being 1 lakh 20. He has to pay me 1 lakh 20. And then to furniture minus item. This value being 1 lakh. And of course, I gain profit on sale to the extent of 20,000 rupees. 20,000 rupees. Now, brokerage. 5% on sale value for 1 lakh 20,000 at the rate of 5%, the broker demands as brokerage. This value is 6,000. This value is 6,000. We have to pay that. Brokerage is an expenses. Loss like. Okay. Brokerage and all these things. You are enjoying some benefit. Okay. So brokerage should be added, and for that payment is made. Okay. So the entry being brokerage. Anything you get is debited, right? In brokerage, are you getting or are you paying? You are getting. Yes or no? By paying the brokerage, you are getting the brokerage service. For that, you are paying. You understand? Two things are there. What are they? Brokerage and cash. Cash is going out minus. Brokerage service you are getting plus. Okay. TV charges, probably salary paid. Are you getting or paying? You are getting the employee service. Advertisement amount paid. What does it mean? You are getting the advertisement services. Cash is going out. Payment is okay, but you are getting. Building purchase. What is journal entry? Building account debit to cash because you are getting the building. Rent paid. What is that? You are getting the rental service. Means you are having the occupancy of the property for temporary period. For that you are paying. So all the expenses you thought it's only payment. No, you are getting benefits. If you are getting the benefits having the life for more than 1 year, as said, if you are getting the benefit only for a short period, expenses. I paid for purchasing the property 1 crore. As said, I can enjoy the occupancy of the property for more than 1 year. More than 1 year. As said, I pay the rent. Now I am able to enjoy the occupancy of the property for only 1 month. Both are enjoyment of the possession of the property. Short duration rent, long duration asset. Rent, I am getting the possession for some period. Purchasing build, I am getting the possession for the long period. If I am getting the possession for the long period, as said, if I am getting the possession or benefits for the short period, expenses. So salary paid, I am getting salary. I am getting the employee service. Paying advertisement, I am getting the advertisement service. I am paying the rent. I am getting the occupancy service. I am paying the electricity bill. I am getting the electricity. Understand? So whatever I am getting, it's plus. What I am for that I am making the payment minus. So the entry being brokerage account debit to cash. If I am not, it's not paid, what happens? Then it's an outstanding. If brokerage not paid, what is the journal entry? We have to again, if the payment is missing, then the party to whom I have to pay or to whom from whom I have to receive, I have to record that person's name, right? So I can use the person's name here. In the absence of person name, we can use a creditor and debtor, whatever it may be. Here is a naturally creditors, or usually we call this being outstanding brokerage or brokerage payable. I will explain the concept outstanding brokerage paid in advance and all in the expenses chapter, expenses content. Probably this one. Payment and receipts for this one. Expenses paid by cash, either check, it may be unpaid or it may be paid in advance. We are going to refer this in detail along with the question number 2. Question number 12. Brokerage is a part of this one. If the brokerage is paid by way of cash, brokerage to cash. Paid by check, brokerage to bank, or bank and cash are interchangeable. Supposed to be payable later on, then brokerage to creditors. Otherwise, we can name this being outstanding creditors. No need to panic with the new term here if you are being the first time learner. Brokerage to cash. If it is pending, payable. Brokerage payable account. Payable account is a creditor. Payable account is a creditor. Is that clear? Brokerage account debit to outstanding brokerage. Right. In Singar Academy's text, I have combined these two journal entries. Okay. That's why the journal entry will appear this way. This brokerage is an expenses. Expenses is adjusted in the profit and sale. That's how the combined entry will be there. First, understand the independent entry. Combined entry can be mastered later on. Okay. I and Co account debit 1,20,000 and furniture goes out 1 lakh. Brokerage 6,000 will be there. So on sale I get 20,000 rupees profit, yet I have to pay a brokerage of 6,000 rupees. After adjusting the brokerage, I am getting only a profit of 14,000. So 14,000 to profit on sale. That another 6,000 supposed to be payable, right, to outstanding brokerage. That's how the entry is recorded. This brokerage debit and profit and loss is adjusted, so it becomes 14,000. That's how the company entry is passed in the Singar Academy text. So if you don't understand this point, as you are being the first time learner, keep it pending. Along with the 12th illustration, you can link, so that will be mastered over this. Clear? Now 5 and 6. 5 and 6. Let's go for the fifth one. Furniture purchased for rupees 1 lakh by exchanging old furniture for rupees 20,000. Book value of the old furniture 25,000 and issued check for the balance. One of the beautiful illustration. Okay. So we are preparing for X, assume, and we are purchasing the assets from Y. We are purchasing the assets from Y. Is that okay? Furniture purchased. What happens? Y gives me a furniture rupees 1 lakh. For that, what I am going to do? I am going to give furniture, though the value being 25,000 in my books, but he has accepted only for 20,000 rupees. Sir, it is not worth 25,000. I will take it up only for 20,000 rupees. So for the purchase, I had to offer 1 lakh, but in return, I have given my old furniture worth 20. So he subtracted the 20 from the consideration of 1 lakh. So balance 80,000 rupees, I had to make the payment. That 80,000 rupees is paid by way of bank. Check, otherwise bank. This is old furniture. This is new furniture. And old furniture, in my book, it appears at 25, but he has taken it for how much? 20 leads to a loss of 5,000 rupees. 5,000 loss. Loss should be what? Plus or minus? Plus item. Loss is a plus item. Now I have to pass an entry here. I have to pass an entry. What comes in our business? New furniture comes in, so plus item. What goes out? Old furniture goes out, minus item. Your bank also goes out, minus item. Minus item. Apart from that, you lose, that is a plus item. Plus item. Okay, all the minus are credited, all the plus are debited. Right. Now, furniture account debit. Furniture account debit 1 lakh. Furniture account debit 1 lakh. Then another plus item is loss on exchange. Loss on exchange. Debit 5,000 rupees. To old furniture. Furniture account. In brackets, to distinguish this one and this one, I name this being N and O. N represents old new furniture and O represents old furniture. Old furniture's book value is 25,000. Should not be recorded the value at which it is taken up. The value at which it is recorded in our books should be closed. Otherwise, the value in the book remains unclosed. The value at which it is appearing in the asset should be recorded on transfer, not the actual value accepted for the transaction. And the difference between the value at which it is appearing in the books as well as the value at which it is taken by the buyer, the difference will be your profits and losses. Will be shown here. So here we face loss we have shown. And bank goes out to bank account. So if you have this concept clearly understandable, then no problem. Otherwise, you first pass independent entry for purchasing the new assets and selling the old assets and settlement of the bank separately. So then you can club, you will get the consolidated entry without any trouble. Is that clear? Hope now you'll be able to understand the fifth journal entry. Clear. Let's now move on to the sixth one. Let's move on to the sixth one. Clear? Furniture sold for 1 lakh and amount received after the credit card charges 1%. Furniture sold. We have sold our furniture 1 lakh. But we received only after a credit card charges of 1%. So 1% on this being 1,000. So we will be getting only 99,000. Clear? You can pass two entries. Furniture sales separate entry, charges separate entry, or you can club. Preferably you can club these two and pass the entry. Right. So the journal entry being, we assume it's a credit card. So we are getting the money from card. Furniture goes out, so it should be minus item. Credit card is plus item, means bank account is plus item. And you are paying 1,000 rupees lesser. You are getting 1,000 rupees lesser. It's a loss. Loss should be plus item. Right. So credit card account debit or bank account debit. This is routed through credit card. Okay, we get only 99,000. Two furniture, the value being 1 lakh, and the difference 1,000 is CC charges, credit card charges. Is that clear? Hope now you'll be able to understand. With that, purchase is over. Sorry, sale of asset is over. Sale of asset is over. Clear? Now, let's move on to the next one. In case of purchase of goods and sale of goods and other use, three components are going to study. Past journal entry for goods purchased, sold, and then the purchased goods used for other purpose other than sale. Clear? Interesting concept. Now, see, furniture purchased. For rupees 1 lakh. What happens here? Furniture is an asset, comes in debit, cash goes out credit. But now the question is, who does this? Who does this operation? Is it by the furniture trader or other than furniture trader? Other than furniture trader. Okay. Clear? Furniture trader. If I am being a furniture buyer and seller, I am a furniture trader. I am purchasing 10 tables and chairs and all, not for what? Using purpose. It's not my asset. I am going to use it for sale purpose by adding some profit. In that case, furniture will be replaced with, okay, purchases. Clear? When we are going to use the term purchases here, I am purchasing for the resale, which is my business activity, where on resale I am making a profit. Then, in that case, those purchases will be always named as purchases. Other than furniture mart, for example, Singer Academy, we purchased a furniture. Why do I purchase the furniture? Is it for the sale? Definitely not so. So, I am purchasing the furniture for what? For my regular use, for an asset purpose. So, it is going to be my asset for a longer period. Then, I am going to show that as furniture only in my books. Is that okay? Stationery mart. So, if you are going to the stationery shop, okay, they are selling, buying the stationery item and selling the stationery item while purchasing the stationery item. They will show this as purchases. For Singer Academy also, we are in need of a stationery item for printing purpose and all, for regular office use. What happens then? It is only a stationery expenses. For me, it's an expense. I debit to the stationery account. If you are misusing that, then it is called error of principle. This is called error of principle. So, if the furniture trader writes this as a furniture account debit, purchased furniture account debit to cash, this is called error of principle, because this is the accounting rule. This is the accounting rule. If you are making any mistake in the rules, then it is called error of principle. Means you don't have the accounting basics understanding. Then what is the correct entry? The correct entry should be purchases account debit to cash. All the items what we have done for the purchases related transaction is going to be repeated here also. Provided we are not going to show the assets name or the particular item's name. We are going to replace that item into purchases account. Clear? Hope now you'll be able to understand. Most of the students, because of the alertness, missing of the alertness, or because of non-understanding the basics, will make the error. Furniture mart purchased furniture. What is the alert? Immediately they will think purchase account debit to cash. Zero mark. Error of principle. So what is the correct one? Purchases to cash is the correct one. That's very, very important point to be noted here. Clear? Now in question number 7, goods purchased. While purchasing, the goods may be purchased by paying cash or may be payable later on. So the comprehensive illustration, the goods will be always renamed with the purchase system. Whatever the goods you purchased, if it is for the trading purpose, then purchase account is debited to what? Purchase account debited to what? To cash. If cash is not immediately paid, then the party's name will be recorded. If the party's name is absent, then automatically what happens? Creditor term is used. Clear? This is the comprehensive illustrations. Very simple. Now, question number 1. XYZ stationery mart purchased stationery item for 10,000. They are doing the stationery business only, purchasing the stationery item. If they are purchasing the goods for the resale purpose, then it is always named as purchases. Purchases is nothing but comes in, plus item. And what's the minus item? Cash is minus item. The journal entry here being purchases account debit, purchase account debit to cash account. This value being 10,000. This value being 10,000. Second entry. Usually they will not specifically tell the name of the item. Usually goods. Okay, usually it is termed as goods. Here also XYZ stationery mart purchased goods for rupees 10,000. The other way of representing. Even though it's goods, it's always purchases only. So goods is plus and cash is minus. Second entry. The journal entry is purchases account debit to cash. Sometimes the goods may also be named as, the purchases may also be named as goods. That way also some books may record, don't get tensed. So either it may be purchases or simply goods account debit. That is also accepted only. But customary practices always debit the purchases account. Is that okay? So the value being 4 lakhs. Third entry. Purchased goods worth rupees 50,000 by cash and 30,000 by check. Okay. So goods plus item, cash minus item, check means bank minus item. So journal entry being third one. Purchases account debit. Purchase account debit. 80,000 in total. 50 is by way of cash. Another 30,000 by way of bank. Okay. To cash, the value being 50,000, and to bank 30,000. Fourth one, purchased goods for credit from KIPS. Purchased goods for credit from KIPS. Okay. Now, one second. Now, fourth one. Purchase goods for credit. So, purchases will be always debit. In case of credit means we cannot write the cash. Next preference goes to the name of the party. Name of the party is given here. Minus. Is that clear? So the journal entry being purchases account debit. Purchases account debit to KIPS. Okay, the value being 20,000. If the name is missing, then you can use the proper name. Common name creditors. Right. Fifth one, purchased goods for rupees 15,000 in credit. Now the name is missing. Purchases plus and credit. As a party's name is missing, then we can use a common name creditor. Okay. So fifth one, purchases account debit Purchase account debit to creditors. This value being 15,000. This value being 15,000. Sixth one. Purchased goods worth rupees 80,000 for cash, 35,000 in credit. Purchases plus cash minus creditors minus. So the journal entry being purchase account debit. Purchase account debit. Yeah, 1,15,000 to cash, 80,000 rupees to creditors. The value being 35,000. Overall value being 1,15,000. 1,15,000. Now, start with the seventh one. Up to 6 we have completed here, and I now move on from seventh one. Purchased goods worth rupees 40,000 for cash and account. So purchases plus cash minus an account. An account means credit. An account means credit. Make my name recorded, I will pay later. That's called an account. Okay. It is not bank account. It's only recorded means in credit transaction. Is that okay? You have to be double cautious here. Seventh one. As the name is missing, what you can do? Common name, creditors can be used. Creditors can be used. Clear? Now, the journal entry being purchase account debit. Purchase account debit to cash. Cash account being 40,000. Creditors account being 45,000 to creditors. 45,000. Overall value being 85,000. 85,000. Is that clear? Now, next. Eighth one. Purchased goods from SSA of the list price 1 lakh. He allowed 10% trade discount. 5,000 cash discount was also allowed for quick payment. Now, we have 3 types of discounts. Cash discount, trade discount, and quantity discount. Where we are going to record predominantly only the cash discounts. So here we have seen 2 discounts type here. One is trade discount, another one is cash discounts. Trade discount should not be shown in our books. Right. While purchasing from the shop itself, they will offer, so 1 lakh, sir, today's offer, you can purchase it for 70,000 rupees. It means you are paying only 70,000 rupees. The 30 is immaterial. It's only for a namesake. Who knows that? He may be inflated and later deflated. So to give you offer like. So only then the customers are pretty happy saying that I saved 30,000 rupees. Really, it's only 70. We never bother about the trade discount, whatever it may be, is immaterial, not to be recorded at all. Cash discount is nothing but, in usual trade case, if you purchase, the money will be payable 1 or 2 minutes later in default. Similarly, if you are selling, you will usually get the money back only 1 or 2 months later. The transaction is most probably only in credit. Okay, for the business. So for Singer Academy, also lots of goods we purchase. Usually the bill will be raised and settled once in every month, not immediately. Will take some time to settle that, right? So that's a customary practice because accountant is not always be available for making the payment for the business case. Now and then we'll purchase some milk, we'll purchase for the tea, and some other stationery item we'll purchase now and then. But each and every day, the accountant is called for paying the money. It's really cumbersome. So they will ask, keep the record for a month, and 1 month later, we'll raise one simple bill and we'll close. So usually in business, it's only in the form of what? Credit transaction. But they will demand some extra money for that. See here, list price is 1 lakh. List price is nothing but what? Price list. Price list. If you ask for a price list for the goods you're supposed to purchase, they will give you a list. Sir, is it final? Do you give any offer? Then you'll ask for. Right. So, have you purchased any price list from or got the price list from the seller? Any such a case happen in your life? Most probably Diwali season. For crackers, you'll get the list, right? Yes or no? Now you can remember that. Give me the price list. They will give the price list, all the crackers, varieties of crackers with the price attached with that. Then you'll ask, will you give any discount for that, sir? Come, sir, finish up purchasing and I'll give the discount finally. It happens always, right? Even if you go for any Mangal and Mangal, one price will be there always. Scored out, and below there is another price. 100 rupees, scored out, 90 rupees. My teacher told me very often, I don't go to that shop. Why, sir? They don't write the price first itself correctly. Always they are rewriting. If you write in your exams and scoring out and writing again, it gives a bad image about your paper, right? Answers paper. Similarly, they are giving me bad image. I don't want to go to that shop. So price list, the list of items along with the prices will be given. From there, a discount will be given. So that price list is called list price. The price given in the price list. From there, trade discount is always subtracted, which is 10%, 10,000. That is scored out. 90. Usually in most of the shops, this is how it is shown. Final price. If you want to pay the entire 90,000 rupees immediately by cash, usually in trade parlance, the payment will be delayed by either 1 month or 2 months. But the buyer says, sir, ready cash. I'm coming with the cash. Will you give some discount? Ready cash? Okay, I'll give another discount. So, do I want to pay that in credit card? Okay, sir. But credit card, there is a charges, As a buyer, you will be losing. As a seller, you will be losing some money. 1% will be there. Give me the discount. I'll give the cash immediately. Not in the form of credit card. Somehow you can negotiate to make the immediate payment by way of reducing the price further. That amount is called cash discount. I don't want to delay my payment. I will pay it immediately. This is called cash discount. This is called cash discount. How will I now record? How will I now record? This is the final payment, cash or bank, whatever it may be. This is the final payment. Payment goes out minus item. Goods comes in, the value being 90 purchases. This is the purchase value. And 5,000, you are enjoying the benefit. Enjoying the benefit is for whom? Owner. So it's a minus item. It's a minus item. What about this 10,000 are immaterial? This is always forgotten. This is always forgotten. 3 types of discounts are there. One is trade discount. Another one is cash discount. Cash discount is you are negotiating with the seller. I'll pay not in the form of credit card, immediate cash or immediate NEFT transfer. I don't delay the payment. What will you give me extra discount? That extra discount because of the immediate payment is called cash discount. That should always be shown in our books of accounts. Another one is quantity discount. What is called quantity discount? If you purchase 8 items you purchased, and while billing, the seller says, sir, if you purchase one more 2 additional units, 10 units, you will be getting 1 extra free. Always it happens, no? When I go for purchasing the commodity, especially some shops, I don't know whether face such a situation or not in your life. I went, I billed, the bill came around 9,000 rupees. The next moment he says, sir, if you purchase for another 1,000, you'll get another 10% discount. It means 9,000, 1,000 extra if you purchase, 10,000, 10% discount, again 9,000 only. Immediately search around here or there. Definitely it happens, you will not end up with 1,000 rupees material. I go and I purchase for 4,000 rupees additionally. 9,000 plus 4,000. I came with a new bill, 13,000 rupees. He says, sir, 15% offer will be there if you are crossing 15%. Immediately go for another 2,000 rupees. But I don't get 2,000 rupees worth of goods. I'll go for another 10,000 or 15,000. That's some business tactics. If you purchase rather than 8, if you purchase 10 items, one free item will be given. That free item is called quantity discount. Buy more, get more discount. Buy more, save more. That is also not going to be shown in your books of accounts. One free, you are not going to show. So trade discount, least bother about that. Quantity discount, least bother about that. But cash discount should be always shown as your gain. Minus item, right? So the final journal entry in this case, eighth one. Purchases account debit. Purchase account debit. 90,000 rupees, the value at which you are supposed to pay in case of credit transaction. Actual money paid to bank or cash, you are paying only 85,000. You saved how much? 5,000 rupees because of ready payment. That is called discount. Discount received. Similarly, it may happen when you are selling the goods, the buyer says, sir, I will pay immediately. What will you give me? Extra discount. Then discount allowed. That will come under discount allowed. Is that clear? Ninth one. Goods purchased for rupees 40,000 and payment made by credit card. Payment made by credit card. Yeah, very simple. Credit card is nothing but again bank like. Is that clear? Now let's see. Goods purchased for cash. Ninth one. Goods plus item, credit card minus item. Purchase account debit. Purchase account debit to credit card or simply bank account. Routed through credit card. 40,000 rupees. 40,000 rupees. 10th one. Goods purchased for 20,000, payment made by credit card and charges applicable 2%. So from the 20,000 2%, 400 rupees you won't get the money back. So you'll get only 19,600 in your bank account. Purchases plus bank minus as there's a loss. Okay, loss. You'll be getting lesser money, right? No, you are paying more amount, sir. It's a purchases, right? You are making payment of how much? I thought it's a sale, it's a purchases. While purchasing, you have to pay 20,000 rupees and charges 200 rupees burned by buyer yourself. 400 rupees excess you have to pay. 400 rupees excess you have to pay. Is that clear? Now, this is bank minus, this also loss minus. The journal entry being purchase account debit, credit card charges account debit, CC charges. Okay, I can club these two. CC charges account debit to bank. You purchased for 20, but you paid 20,400. If it is being sales, reverse may be happening, minus 400 rupees. You are purchasing. The credit card charges either may be sometimes payable by the buyer, sometimes it may be accepted by the seller. Most of the trading transactions, shopping online as well as shopping, usually the credit card charges is accepted by them. When you are supposed to go for buying the gold and all, okay, usually they demand you to pay the charges also. Buyer, as you are being the buyer, you have to pay the extra. So the charges being 400. Clear? So here the charges is accepted by the buyer. Sometimes it may be seller. In both the case it may happen. Hope you will be now able to understand the 7th question. Clear?